So there are just so many indicators on TradingView, and to be honest, most of them are actually pretty useless. But I have done the research, and in this video I will share with you guys my top 3 TradingView indicators that you can start using right away as a beginner, but these indicators are also super useful for more advanced traders. So yeah guys, let's just get straight to the point and start with the first indicator. So the first indicator we're going to take a look at today is an indicator that can help you win more trades, because you can use this indicator to avoid getting stopped out from winning trades. And our first indicator is the ATR indicator, which stands for average true range. And to open the ATR indicator, you go up to indicators, the indicators tab in TradingView, and you simply search for ATR. And you see that you have something called average true range right here. You click on that one, and here on the bottom you have the average true range indicator. To make this one a bit more clear for educational purposes, I'm gonna click on the settings tab and I'm gonna make the line a bit bigger. So I'm gonna take the maximum size for the line, cross out the settings tab. So now hopefully you can see pretty clearly the average true range indicator down here. And what does this indicator actually tell us? Well, simply put, the ATR indicator measures volatility. And you can think of volatility as how much and how quickly the prices move in a certain time period. So let's just very quickly demonstrate what volatility is, because if you understand volatility, you will pretty easily understand the ATR indicator. So if we have a price action that looks something like this, the price goes sideways, it doesn't move a lot, then this price action is considered low volatility, compared to if you have a price that moves up and down a lot with strong movements like this. So this right here is considered low volatility, and this right here is high volatility. And this is exactly what the ATR indicator measures. So if you look at the chart right here, by the way, right now we're looking at Bitcoin on a daily time frame, so every candlestick on this chart represents a 1 day. But what you will notice here is that during times when the price doesn't move a lot, for example right here, you will notice that we have low values on the ATR indicator. And during times when the price moves quickly and a lot, you will notice that we have high values on the ATR indicator. Let's look a bit left to show some more. Once again, you can see that right here we had a period when the price moved a lot. This will give us high values on the ATR. So now you hopefully have a basic understanding of what the ATR indicator tells us. Now let's take a look at what I think all of you guys are curious about, and that is how do we actually use this indicator. And one of the best ways to use the ATR indicator, and this is a method that professional traders use, is to use it when you set your stop loss. As you know, if you have been following the channel for a while, you know that if you are trading based on technical analysis, you always have to set a stop loss, and the ATR indicator can help you set better stop losses. So let me show you. So let's say that we had identified a support area right here. You can see the Bitcoin price found support multiple times right here. The price went up, we went down and found support once again at this level. So let's say that we had identified a trade at this support. You can see right here we actually had a bullish engulfing pattern, which is a bullish Japanese candlestick pattern that indicates a potential reversal to the upside. And at the same time, this bullish engulfing pattern happened at a key support level. So let's just for the example say that we entered a trade at the high of this candle. So we entered a trade right here. So we enter a long position right here. Let me actually take away my face so you can see it a bit more clearly. And what you want to do when you enter the trade is that you want to take a look at the ATR indicator. So what is the value of the ATR? So you go down here and see that right now the ATR indicator is right now at around 1,900. And this tells you that the average daily volatility for Bitcoin at this point is $1,900. So at this point in time, the Bitcoin price moves on average 1,900 in a day. And if you wonder how you calculate the average, you can go here to the settings tab for the ATR, and you can see that this one is based on 14 days. So 1,900 is the average for the last 14 days. But a common way to use the ATR is that you place your stop loss on, for example, 2 times the ATR. It can be other numbers, for example 1 times the ATR or 3 times the ATR, depending on your trading strategy. But let's say we want to place our stop loss at 2 times the ATR. Remember that ATR was 1900, so we want to place our stop loss at 2 times 1900, right? So we want our stop, we want our red area here to be around 3800. So we set our stop loss right there. Let's say we have a 2-to-1 risk to reward ratio, then our trade would look something like this. And you can see in this case, we hit our target level pretty quickly. So this was a very nice trade. So our second indicator we're gonna take a look at today is called the all candlestick pattern indicator. And this indicator is amazing. To open this indicator, you go up to the indicators tab in TradingView, you search for all candlestick, and you can see that you have an indicator called all candlestick patterns. You press this one, and now you can see that many small windows just popped up on the screen. All of these windows stands for a specific candlestick pattern. So for example, the blue pattern right here stands for a bullish engulfing pattern and suggests a potential reversal to the upside. The red bar right here is a bearish engulfing pattern that suggests a reversal to the downside. And the gray bar right here stands for a doji candle, and this one represents that neither the bulls or the bears are in full control. And the wonderful thing about the candlestick pattern indicator is that you can go up here to the settings tab of the candlestick pattern indicator, and you can choose what candlestick pattern you want to appear on the chart. So let's say that you only want engulfing patterns, then you uncheck everything except the engulfing patterns. You click on OK, and now you can see that we only see the engulfing patterns here on the charts. And why is this indicator so useful? Well, using candlestick patterns is a very powerful tool in trading. It can help you get better entry and exit points, and it can be combined with other technical tools, for example, support and resistance, chart patterns, and other indicators. So let's just take a quick example how you can use the all candlestick patterns indicator. So first of all, let's say that we're only looking for engulfing patterns. Then you go to the settings tab right here, and you make sure that the engulfing pattern is, crossed in. You press OK. But let's say we have identified a resistance level right here. You can see we had a clear reaction one time. We had some resistance right here as well. The price went down, but now the price are once again pushing up towards that level. So when it comes to trading, you don't just want to blindly buy on a resistance level. You always want to use the support or resistance levels together with other technical variables, for example, candlestick patterns. You can see in this case, we actually saw a bearish engulfing pattern coming in here exactly or just below the resistance. You can see this right here is the actual pattern, the bearish engulfing pattern. So this could be where you actually enter your short trade. So an example could be to enter short at the close right there. And you can actually use the ATR indicator that we learned earlier in the video to set a precise and good stop loss. Let's say your stop loss is somewhere around there, and perhaps you have a 2-to-1 risk to reward ratio. When it comes to candlestick patterns, however, it is very important in my opinion that you, even if you use this indicator, you still should learn about candlestick patterns, because the indicator might actually miss some patterns that are almost valid patterns. I can actually see one right here as an example. You can see these two candles right here. In my opinion, I would see this as a bullish engulfing pattern, but you can see that the indicator doesn't find this one as a bullish engulfing pattern, but I would still consider this one a bullish engulfing. So it's still important to learn about candlestick patterns. It's also important to learn about candlestick patterns so you understand the psychology behind the actual patterns. So why does the patterns work? So our third indicator we're gonna take a look at today, and this one is amazing, is the volume profile indicator. And to open up the volume profile, you go up to indicators right here. You simply search for volume profile. And what you will notice here is that we have many different types of volume profiles. Today I'm gonna use the visible range. And you can see that just recently it popped up some bars here on the side of the screen. I want to change some settings before we continue here. So I'm going to go up to the settings tab right here, and I'm gonna change the row size to 200. This will make the bars on the side much smaller so that we get a more precise volume profile. Alright, so now you may wonder, what does these bars on the side actually mean? And these bars basically tells us where on the chart have we seen the most amounts of volume. And in the case of Bitcoin, we are still looking at Bitcoin. It tells us where the most Bitcoin have been traded. So if you have been trading for a while, you are probably familiar with the standard volume indicator. So the standard volume indicator is down here, and that volume indicator basically tells you for every day how much have been traded for that specific day. So for example, if you take a look at this red candle right here, this large red candle, you can see that we had lots of volume traded that day. And you can see right here is another example where we saw lots of volume traded, but the volume profile doesn't tell us what day a lot of volume have been traded. The volume profile tells us at what level a lot of volume have been traded. And the volume profile can be used to find significant support and resistance levels. So you can see at the areas where we have been seeing more than average volume traded, these areas will more likely act as support and resistance levels. So you can see, for example, right here, you can see we had a lot of volume traded. This means that this area right here, around here, is more likely to be a support and resistance. And you can see that this level right here, where the price have been trading for a long while, is probably a very significant support level. But what you will also notice here about the volume profile is that the middle, or where we have been seeing the most volume traded, is not usually a precise line. So you should always look at the volume profile support levels as sort of areas. You should look at them as more of broad support areas where we are likely to see buyers in the case of a support level coming in, and if you have a resistance, for example up here, it's likely for selling pressure to come in. So to summarize, one of my favorite ways to use the volume profile is to find significant, support or resistance areas, which you can then use together with other technical variables to improve your trading. But guys, the learning doesn't stop here. So right now I will actually pop up a video on the screen where I will talk about exactly how I would learn day trading if I could start over from scratch, if I could start over from the very beginning. I really think that video will provide some value, so make sure to check that one out. But for now guys, take care. Ciao ciao.